Good afternoon. Pat McGibbon here with the key economic news that impacts the manufacturing technology market. Let's start with the Federal Reserve. The Federal Reserve's FOMC, which stands for Federal Open Market Committee, met in late July to review the economic data and the economy's performance plan. The committee is very important because their decisions can trigger a chain of events that affect short-term interest rates, foreign exchange rates, long-term interest rates, the amount of money and credit, and ultimately a range of economic variables, including employment, output, and the price of goods and services. The July meeting, the FOMC emphasized after the meeting 3 observations. First, they see a significant downside in the risk to the economic outlook. The pandemic issue has to be resolved before they can really feel comfortable about where the economy is going. And finally, there's going to have to be additional fiscal relief to see us through this time of crisis. Now, that basically signals that they believe we need more money into the system, and they have the ability to do that through a variety of different channels. The top analysts who watch the Federal Reserve expect that this will lead to interest rates remaining low for the foreseeable future, and that inflation might actually climb to something a little bit larger than the 2% target that the Fed had set out or been aiming for the last few years. Now, the Chicago Federal National Activity Index was also released this morning and heralded some fairly good news for us. Now, the National Activity Index is comprised of 85 economic indicators to provide real-time sense of whether the economy is realizing its potential. A zero value for the monthly index has been associated with the national economy expanding at its historical trend or average rate of growth. Positive numbers are greater growth than that. Negative numbers, of course, are shorter or smaller contractions in the economy. After posting a negative 18% in April, May's number was plus 4.2, June's number was plus 5.3, and the July preliminary number is 1.2%. Now, in terms of July, that 1.2% is actually a large, because over the past 9 years, the numbers for July, because it's one of the summer months, the numbers for July have been typically either flat, near zero, or negative. So it's not a big deal that it's 1.2. Actually, it's a positive thing that it's 1.2, because that's just a historically high number for July. Moving on, the preliminary IHS Market PMI, or Purchase Managers Index, for August came in at 53.6, which is the second month in a row with the index in the expansion level, that being any number above 50. And it's the fastest rate of growth since January, earlier this year. The other big news coming up is housing starts for July were 1.5 million units. Now that's up 23% from June. And when you compare it to the average of 2019, it's 16% above that. That means we're doing really well in housing starts. And they're significant, not only because they represent a lot of economic activity, but they also represent a lot of downstream manufacturing potential. When you take a look at a house, it's got an HVAC system, water systems, ovens, ranges, refrigerators, you get it. A lot of metal in that house. So every new house gets a whole package of that to begin with. And that's usually means a pretty good business for people in the job shop industry, appliances, and a host of other people who have fittings and components that go into those products. It's been another key indicator to watch for later this week is the durable manufacturing sector. We're going to get numbers on shipments, orders, and durable goods for durable goods. And I think it's coming out Wednesday. Now, durable good orders were up 7.6% in June over May levels, and the analysts are believing that July's numbers are going to be up by about half that amount, probably around 3.6 or so. And if that's true, that's going to be a really good start going June, July. If we can post it in August, that would be 3 months in a row, and that's a trend and would signal maybe we're in the start of a recovery. So watch out for Wednesday when these numbers are announced. And then if you miss it there, we'll catch you on next Monday here. Finally, I want to encourage you to take a look at IMTS website. Completely new layout. Front page is a portal to the IMTS Spark, IMTS Network, and of course, IMTS 2020. Whether you're an exhibitor or a visitor, you're going to really want to check this out because those amazing people there have done a great job of lining up some really important content for you over the course of the week of IMTS and then over the course of the next 5 months as we go into 2021. Personally, I will be presenting the economic discussions with 2 other AMT analysts on the IMTS network during the week of IMTS. Chris Downs and Chris Chiswick, economists at AMT, We'll be discussing some overall issues or subject matter. Then, starting on September 22nd, IMTS Spark will kick off, and we'll be running through the middle of March of 2021. And I'll be bringing you new intelligence and economic updates on a weekly basis to that audience. Now, that schedule isn't up yet, but we'll let you know when it gets there through one of these Monday events, probably. I may have not mentioned, but the schedule for IMTS Network is up. And I would say get up there, take a look at the different content levels and what is going to be interesting to you. Mark it on your calendar so you don't want to miss it. And if you do miss it, we'll be streaming it later on so you can always catch up, just like your favorite show on Hulu or Netflix. So until next week, stay safe and stay busy. We'll talk soon.